Hello Doge family, how are you today? Dogecoin price prediction. Outlook for the rest of 2021 and 2022 summary. Out of all of the speculative frenzies over the last 18 months, Dogecoin takes the cake as the craziest. Doge lovers, don't forget to like the video, subscribe to my channel and turn on the notification bell before going into the details. I work hard for the Doge family. I'm glad. We will grow Dogecoin together. What I say in my graphic predictions are always correct, friends. I hope it will be useful for you. I will determine the trading points for those who want to trade short. And today I will tell you the important developments. Dogecoin currently has an annual inflation rate of nearly 4% per year, lacks the adoption of BTC, and was literally started as a joke. Doge illustrates an economic concept known as bezel, or artificial value that builds up in boom times, only to be washed away when the tide goes out. How Dogecoin reflects some of the broader problems with the global financial system and why it's not likely to hold its value when there are superior cryptocurrencies like Bitcoin. Dogecoin surged earlier this year, powered by Robinhood traders piling in, egged on by YouTube and TikTok. A quick glance at Dogecoin videos on YouTube confirmed that the majority of the titles are still in all caps and that there are still plenty of moons and rocket ships in the video thumbnails. The price hasn't hit the $1 that the TikTok profits called for, but a few early people made a ton of money. A lot of them were celebrities or social media influencers, while anecdotally, more of the losers of money in Dogecoin were average Joes. The action in Dogecoin illustrates an economic concept called bezel that is making the rounds in public discussion right now. I've had multiple people send me this piece from the Carnegie Endowment. Bezel was coined by John Kenneth Galbraith, a Canadian-American economist who advised the Kennedy administration. He's since passed away, but he developed a very intuitive concept that explains some of the quirks of the market economy. Put simply, bezel is fake value. The term is derived from the crime of embezzlement, which is regarded as an interesting crime to economists because as long as the embezzlement is undiscovered, the same money exists twice. The embezzler is free to spend the taken money, while the counterparty they're stealing from doesn't realize the money is gone yet, so they spend freely as well. At some point, the illusion vanishes, and the extra money is forever gone. Is Dogecoin bezel? A broader meaning of bezel, which I personally refer to as froth, refers to anything where the market value exceeds the actual value of the underlying asset. Charlie Munger coined the term, functionally equivalent bezel, in the 1990s, referring to companies that sold near worthless stock to investors. For example, AMC Entertainment loses billions every year and has no plausible prospects to reverse this. After the meme stock surge, the company has recently issued billions in stock to offset this, pocketing cold, hard cash. The problem is that it's widely known, and disclosed in AMC's secondary offering documents, that the stock has no long-term economic value anywhere near its market price, meaning that the money that the company and old set of owners made from selling shares is currently being double counted. The original owners, such as China-based Wanda Group, much of the company's management, and institutional investors sold out for actual cash, while the new retail investor owners don't yet understand that their asset has little to no economic value. Buying an altcoin that your favorite porn star recommends on Twitter? Sounds like bezel to me, not necessarily fraud, but at least meeting Munger's definition of functionally equivalent bezel. There's an interesting question you can ask about asset bubbles, which is to ask where the money goes in a market crash. Sometimes the answer is that people are forced to sell at artificially low prices, but in the case of drawn-out bear markets like 2000 to 2002 and 2007 to 2009, the answer is that the value may have never existed in the first place. Bezel can last for years, sometimes decades in rare cases. British economist John Kay noted that Enron, for example, cooked its books for 10 years and became one of the most valuable companies in the world, and it was only when the economic cycle turned down and when cash in the system got scarce that it was discovered that they weren't for real. To this point, Bernie Madoff and his investors spent money for decades on the assumption that their wealth was increasing, but it was all a lie. Millions of Americans received stimulus checks in 2021, and a lot of it went into Robinhood, and specifically into crypto. Dogecoin 2021-2022 Outlook. Why I don't see value. Dogecoin has too much inflation. 5 billion Doge are issued each year, against a supply that is now approximately 130 billion. This is roughly a 3.9% rate of inflation, and it was designed this way. The argument is that inflation is good because it lets more people buy, but it's a ridiculous argument since it's an intentional wealth transfer to miners. Many of the miners are just going to sell their Dogecoin on the open market and trade it for real assets. Bitcoin, on the other hand, now has an inflation rate of about 1.8% per year, which will drop to 1.1% in 2024, and then drop even further in subsequent years. Proponents note that Dogecoin inflation will slow down with time since only 5 billion coins, yes, billion, are mined each year, but I question what the value of a currency like Doge is with high inflation, competing cryptocurrencies with more professional developer communities, and the speculative boom fading. You might think I'm splitting hairs here, but the most fundamental thing about crypto is that it's supposed to be a better alternative to fiat currency. Dogecoin has an inflation target of nearly twice the US dollar. Dogecoin doesn't solve any pressing problems. Bitcoin kickstarted the cryptocurrency community by providing an alternative to government-backed currencies that could be sent anywhere in the world for a small fee. Dogecoin built a foothold around being fun and cool, and the valuation may well have made sense in this context. Then Elon Musk started tweeting about it and a speculative boom started, and people just started buying it because they thought someone else would pay even more. The people that I knew who got into Dogecoin this year didn't do it because they had some grand libertarian opinion of what currency should look like, or they thought it would change the world. They got in because they wanted to make as much money as possible as fast as possible, then dumped it as soon as it stopped going up. New altcoins are constantly being created for speculation, creating more and more bezel. Robinhood's dominance of the market. Robinhood is the main conduit that Dogecoin is traded through, and Robinhood makes a fortune off of the bid-ask spreads, which in my experience are at or near 1% of the value of the trade. Robinhood isn't free and made an average of $112 per user in actual cash during the second quarter. Remember the Matthew McConaughey scene in Wolf of Wall Street? Much of it from crypto trading. They don't have a whole lot of competition for Dogecoin trading, so you tend to not get great execution as a customer. Another issue that may or may not be Robinhood related is the severe concentration of Dogecoin into the hands of a small number of holders. Lack of infrastructure. Bitcoin has institutional infrastructure which allows for cheaper transactions, competitive market making, and short selling via futures. These all make the market more efficient. Dogecoin lacks this, and no one is going to go out of their way to build it. The end of fiscal stimulus. Personal incomes rose in 2021 with unprecedented government stimulus. Part of Dogecoin's appeal is its low price, which is designed to appeal to those without a lot of money to invest. A lot of first-time investors are living above their means from stimulus, speculative profits, or both. These investors will almost withdraw money from their trading accounts as financial conditions tighten in the coming months and years, disproportionately hitting speculative stocks and altcoins. In particular, I believe the student loan pause ending in January is likely to put pressure on Dogecoin since the demographics of Dogecoin, Robinhood investors and student loan holders are so similar. I will keep you informed of developments as soon as possible. We've come to the end of the video, guys. I hope you understand what I want to say. Express your thoughts by commenting. Don't forget to like the video and subscribe to my channel. See you in the next